Hello, chart watchers and Decision Point faithful. Welcome to this Monday, November 18th, 2019 Decision Point show. I am your host, Erin Swenlin, and of course I have my dad here as co-host, Carl Swenlin. And we want to welcome you to the show, especially if this is your first time today. And of course, for those Decision Point faithful, we do welcome you back. All right, well, let's go ahead and get started. How's everything going with you today, Dad?
Oh, pretty good. I was watching Fox Business, and the last hour of trading, they had pictures of a volcano, and apparently there's a lot of talk about a blow off.
Ah, yes.
So I I I don't think we're there, but we'll talk about that later.
Yes, absolutely, we will. Of course, we're going to get into that. We will look at those broad market indexes. I'm going to go over our Decision Point scoreboard and as well as our sector scoreboard. I'll be looking at the DP indicators. Carl and I will be talking to you about what we're seeing on the S&P 500 chart. And then today, as our big bonus and our little bit of an announcement here, we have now released into the Decision Point Market Indicators ChartPack a new chart list. So if you reinstall your Decision Point Market Indicators chart list, you're now going to have a chart list with the Golden Cross and Silver Cross indexes. So we'll talk about those and go through some of that chart list. And I'll definitely be showing you how to download a chart pack, in particular this one, and how you can find those chart lists, especially this Golden Cross, Silver Cross index. All right, so let's go ahead. I'm going to start off with those Decision Point scoreboards. Nothing has changed. Still waiting on the PMO monthly chart. The PMO on the monthly chart is what gives us this sell signal right now on all of these. It has turned up. The monthly PMO has turned up on all of them, but we do not have a positive crossover, and we will have to see where it stands at the end of this month. But as the last I looked, I don't think we're going to see those signals change this month, but we'll have to wait and see. At this point, everything else is in green. Our trend is up. So when our trend model has short, intermediate, and long-term buy signals, of course, that means that all of your EMAs are configured in the perfect way, which is the faster EMAs on the top and then going down to the slower ones on the bottom. So we know that the market trend continues to be up. Momentum is still there right now. That's why we have those PMO buy signals. The sector scoreboard, I don't think this has not changed since the last week's show, but we did get that neutral signal in about a week and a half ago for real estate. And the sell signal, the only sell signal right now is on the long-term trend model for energy. And basically this is telling us that the 50-day EMA is below the 200-day EMA on the energy sector. So we'll have to take a peek at that. I don't think we're too close with a change there, but real estate went to a neutral. It's not a sell, it's a soft sell, as we call it. And that is because the 20-day EMA crossed below that 50-day EMA, while both of them were above the 200-day EMA. So you've got a 50 over the 200, so you still have a bull market configuration. But when you get that 20-50 negative crossover, we don't go into a full sell position. We go into a neutral position, or what we call a soft sell. All right, let's go look at some of these charts. I'm sure you're dying to see them. Let's go ahead. I'm going to start off with the price relative chart so we can see how those major indexes are faring against the S&P 500. And there you go. The trend models are in beautiful configuration right now because we have been experiencing a really nice rally here after the breakout to new all-time highs, and we just continue to keep setting them. The Dow Industrials are now starting to increase their relative performance against the S&P 500. I suspect that Apple might be helping that. The NASDAQ 100 is really performing about the same as the S&P 500, but we do see that some of those larger caps, those S&P 100 stocks, are starting to underperform the S&P 500. And of course, the mid caps and the small caps continue to struggle. and underperform those large cap indexes. All right, the broad market indexes that I'm going to look at here, these are the price charts, not the relative comparisons here. And as you can see, we have the SPY up here on the top with that nice little breakout. You can see that in the thumbnail. We've got the equal weight S&P 500 ETF, which also is performing well, has set new all-time highs. Although today you'll note that we did not get a new all-time closing high for the equal weight, but we did for the
Hey, you did.
SPY.
You did.
Mm-hmm.
Yeah. Oh, I'm sorry. I'm looking at the wrong chart.
Oh, okay. All right, and then we have the S&P 400, and again, they not really pushing at those all-time highs yet, and of course the S&P 600 really struggling, continues to, and you can see even though we've been watching the SPY moving upward in direction, you can see mid caps sideways, but look at the S&P 600 is really struggling here and not participating in this move to new all-time highs like the Dow and the NASDAQ are. Okay, just a quick look at those global markets. You can see this chart in the Wednesday Decision Point Alert midweek, and do you include this chart? Maybe a different version.
Yeah, the same chart, different version.
Yeah, in the weekly wrap on Friday, so you'll want to check that out. Not too much to report here. I do notice though that, and I had made mention of this before, the Japanese Nikkei has come out of its bear market, and you can see that the other indexes are starting to do just that. The German DAX, we still haven't gotten to those all-time highs. French and Canada doing well, setting new all-time highs. And then India has not quite gotten to its previous all-time highs. It's really flattened out. And the Shanghai Exchange continues in its bear market that started back in early 2018. All right, let's go ahead. I'm going to let you use your have you use your S&P 500 or your SPY chart, Dad, so you can share that.
Okay.
And give your perspective here, because I know we are in agreement.
Yeah. This is about a 4-month chart.
Oh, I don't have your screen yet.
Oh, you don't? I didn't share.
No.
I did share. Why don't you take it back? We'll try it.
Well, just keep trying, I guess. In the meantime, I mean, I guess you can give your overall thoughts about what's going on in the S&P 500 since.
Okay, well, the main thing is that the volume for the total volume on the S&P 500 is has been very low the last 6 sessions. Even Friday, which was a option expiration day, should have been pushing the 1-year average volume, but it was still well under that. So in spite of the new highs, I don't like what's going on in terms of the volume behind the move. That doesn't mean it's going to all fall out of bed, but I just think we really need to pull back about this point anyway.
Yeah, I absolutely agree. I just, it's been really frustrating, I have to say, because I've been feeling this way. I've been looking at my analysis and have felt that fact, you know, as soon as we started to flatten out here after the breakout. And it's really, I keep waiting for it as well. We could have an island that's forming up right now at the end of this rising trend that I'm looking at.
Yeah, it looks like it's a two candlestick island right at this point.
Yeah.
It's, I just think it's extended. Again, a blow off is going to have more volume behind it.
Yeah, that's for sure. I'm looking at the VIX as well. I basically just pulled up your chart from the weekly wrap that you did. And I see that the VIX, we're starting to push against the top of that Bollinger Band on our reverse or inverse scale. And typically that is what we see right before a decline. But you know, what I'm seeing with that VIX is those Bollinger Bands are just shrinking. It's too easy right now for them to penetrate one or the other because those bands have really closed. So I'm not finding it to be as useful as I normally do. All right, let's see here. Let me go over to, we talked about these ultra short-term indicators, so I'm not going to really get too much further into that, but let's look at the short-term, the Swinland trading oscillators, because we are starting to finally see them make that move upward a little bit. The declining trend tops line that I have on the Swinland trading oscillator breadth, the STOB, we're getting a little bit of a breakout from that declining tops trend line. Not really seeing the same off of the STOV, the volume component one, but both are turning up above that zero line, which I do find to be encouraging, as we say. And then when I look at these stocks above their 20-day EMA and the percent of PMO rising, you know, I don't like the fact that as far as positive momentum goes, we only have 63% of the S&P 500 components with rising PMOs. These PMO, of course, the black line here. And so you want to see that rising. And if we have a bunch that are in decline as we're making new all-time highs, that is a bit concerning to me. But we do have 3/4 of the S&P 500 above their 20-day EMA. And that does seem to be rising right now. Intermediate term indicators. And you can see we do have a declining tops trend line that I have put in there, but these have whipsawed back and now have crossed above their signal lines. But of course, that declining trend is still very much intact. And honestly, I'm just looking at that as that negative divergence with those price tops, and you've got the declining tops trend lines here on those indicators. I think it's good to see them turning back up, but boy, that ITVM is already fairly overbought. We didn't see quite the same move to the upside as we did on the ITVM, but yeah, I don't like that negative divergence that's sitting there. You can see that previously back earlier this year that did preface that big decline that we had was that negative divergence. It's something that you could note. All right, I think it is time to talk about our new golden cross and silver cross indicators. Have you been able to grab the screen yet? Have you tried?
No.
Okay.
It said I have the stop share button. So.
Oh, I see. Right. Okay.
I'm sharing, but.
I'm going to try a new share just to see what happens. Here are, this is what the chart packs look like. So we have the market indicator chart pack here, and these are the various lists within it. So what you do if you want to get these chart packs, and right now they are free, so I highly recommend if you are a extra member or above that you consider downloading right now. And there we go. So I'm going to manage my chart packs here. So I'm going to start from scratch because this is the one, the DP market indicators. That's the one that we want to add. So right now, if I go down here to my chart lists, I just have a few of them here. This is the Market Watchers account that we had before. So I'm going to go and I want to get that DP market indicator chart pack. So you go to your accounts, chart packs, manage chart packs, and here you have the list of a lot of the chart packs that are out here right now. And I know Art Hill has some really great ones. These you can, if you click on them, you'll get an information about what is in these chart packs. So you'll know the list. Like I said, this one's new, the DP market indicators chart list with the golden and silver cross. We don't have that in this list, But in addition to all of these chart lists, you also will get that new one. So I'm going to show you how to download it. We're going to do it right now. Just install ChartPack and boom, I'm back on my dashboard. And when I go down to chart lists, now I have that market indicators ChartPack. And we have everything from the McClellan oscillator to our PMO analysis charts and put call ratios. I know people ask me for those a lot, but now we have this new Silver Cross, Golden Cross indexes ChartPack right now. So if you click on it, these are all of the Golden and Silver Cross, the different sectors and indexes that we have it for. So I'm just going to pull up the S&P 500 right now so that we can explain a little bit about what they're seeing, because I know we talk about the Golden Cross and the Silver Cross indexes, but not everybody is familiar with what they are and what they do. So right now, can you see my screen?
I am looking at it on my second computer, but I can't do much with it over there.
Okay, well you can
I can see what's going on, and I probably ought to give a little background to people who have not heard of this before. But certainly the Golden Cross is as old as I have been in the in technical analysis. I've heard about it, and it's a matter of the 50-day moving average crossing up through the 200-day moving average. And it's golden because it's assumed that you've entered a very bullish phase of that particular stock. In our intermediate term trend model, we have the 20 EMA crossing up through the 50 EMA as an intermediate term crossover, bullish buy signal. And I thought to make it a companion to the Golden Cross, we'd call it the Silver Cross. And incidentally, the opposite of a Golden Cross is the Death Cross. And I haven't come up with it. I'm thinking instead of when you go from a Silver Cross and go down on that one, downside crossover, maybe it should be the Asian flu cross. I don't know. It could kill you, but you'd probably recover. But it occurred to me about a year ago that it's such an obvious thing. Somebody may have already thought of doing this, but I have never heard of it before. And but to have an aggregate of all the Golden Crosses in a particular index. So we have for the S&P 500, and on this chart we can see there 74% of the stocks in the index are on a Golden Cross, which is not too shabby. And the same goes for the Silver Cross index. There are 70% of the stocks in the index that have a Silver Cross. The next step you take this, obviously, is to set up Golden Cross and Silver Cross indexes. These are the aggregate on all the are a number of other market indexes and sector indexes. Can you pull down? And there you go. So we have actually 22 total sets of indexes there. And of course, we have the 11 S&P sectors. And then we also have the major market indexes like the small cap, S&P 600 small cap, NASDAQ Composite, New York Stock Exchange. NASDAQ 100. Select the S&P 100. So there we have, you notice we have 81% today of the stocks in the S&P 100 have a silver cross. And compared to the S&P 500, which is about 71%. Right. So you can see this bunch, this group of 100 is what's really dragging the index up.
Yeah, it must be. This is the S&P 600, and as you can see, we haven't even come close to those previous all-time highs, and we definitely don't have those same robust numbers that we're looking at on the S&P 100.
And click down one chart, and this is that's not the one. Yeah, get the gold miners.
Ah, yes, there we go. Yes, this is really cool.
Right. Basically, I think they're in mid 40s is what the number of stocks are in the gold miners index. And notice that it really moves around. It goes from 100% to 0%. And it moves quite frequently and with a wide range. But notice that the latest price top, we dropped we dropped from 100% to 30% stocks on the silver cross. And so at this point, I would be a little bit nervous unless we see a price breakout of some kind.
Yeah, absolutely. That's pretty, I really am, we're still not testing them, but we're still looking back into some of the history of them and just seeing, you know, how it reacts and do those are those crossovers meaningful and that sort of thing. And I have to say so far, I am finding them to be very meaningful, and they really do seem to mark the right times. And the other thing that I'm noticing with them is that when you use the PMO in conjunction with some of these. So for example, let me go back.
Well, the only one I have the PMO on was because it was the gold miners index. The other ones all have the stocks above percent of stocks above 20 EMA at the bottom there. See?
Right.
And I find that as a better indicator than PMO.
Right. I've got it. I had put it on the top of my gold and silver cross for the S&P 500. Oh, yeah. And, you know, I was just looking at some of the moments in time where we've seen crossovers at a similar point in time. And, you know, the results seem to be pretty interesting, I would have to say. This, you know, the PMO tends to be a little bit quicker in some regards, but not always. But they do tend to, of course, follow each other a little bit too. So when I see, you know, 3 sell signals lining up, and of course this one didn't come in that soon, but when you start seeing these line up with the momentum and with the trend model, which is, you know, strictly, the trend models are just price-based moving average, you know, that's what we're looking at. The PMO is, you know, got a different calculation to it. And so I like being able to see, just like our scoreboards, what's going on with that PMO and momentum, but also have a really good picture of what's going on with the trend models within the index, just by being able to see these silver cross and golden cross numbers. So I think it's they're really powerful. And so I think something you guys should look at maybe downloading. Like I said, you can get to that very easily by just going to your account and manage chart packs. You do need to be an extra member above just because there are so many chart lists in it, and a basic member, you only get one chart list. So something to consider, but we have all different kinds of chart packs that are available and right now for free.
They might like to look at the technology. But,
oh yeah, let's go back. That's true with Apple going on. Let's take a look at this. And there you go. So we've got over 75%, so over 3/4 on the Silver Cross index, and then over 80%, almost 81% of those components in the technology sector. We're seeing with 50-day EMAs above their 200-day EMAs. And
yeah,
then when
notice that the Silver Cross, though, at this, while the index is making new all-time highs, it is the Silver Cross is much lower, quite a bit lower than the top it had in July.
Right. And this, makes sense with what you were talking about earlier. I mean, the technology stocks do tend to be, you see a lot of them in, of course, the NASDAQ 100, but even with the S&P 100, just seeing those higher numbers on those silver and golden crosses for the S&P 100, and I didn't see the NASDAQ one. There we go. And I think we're going to see not quite the same numbers on the NASDAQ 100, though. Very interesting. All right. Well, it is about time to wrap it up. Is there any sage advice, interesting things or something you'd like to close with today?
Actually, no, everything I have to say needs a chart.
I know. Well, we'll make sure that we get that all working right for next show. But I did use the weekly wrap charts. So you were speaking to the charts. I think everybody saw what we needed to. So. All right, well, it is time for us to say goodbye, and we do want to thank you for joining us. You can catch us every Monday at 5 p.m. Eastern. So do join us, and hope we see you back next Monday. Happy trading.